welcome to ICICIdirect. We're in exclusive conversation today with Sachin Relekar of IDFC Balanced Advantage Fund. Sachin Relekar is an industry veteran who, prior to joining IDFC AMC, was the Chief Investment Officer Equity at LIC Mutual Fund, where he played a key role in formulating the investment framework, launching equity ETFs, and developing the investment team. His prior stints also include working with Tata Mutual Fund and CD Equisearch Private Limited as a research analyst. Sachin is a CFA and has completed his master's in management studies from Jamnalal Bajaj Institute of Management Studies after qualifying as an engineer from Shivaji University. Sachin, thanks a ton for joining us today on the show. I want to talk to you a little bit more about the IDFC Balanced Advantage Fund. First up, what is the role of dynamic asset allocation during volatile times like these? What are the criteria considered while managing IDFC Balanced Advantage Fund?
Before giving the answer, I'll just like to thank ICICIdirect as a platform for giving us this opportunity to be presenting and talking about our Balanced Advantage Fund. And so thank you very much. When we're talking about a dynamic asset allocation fund, it's a fund which caters to an audience which wants to have an equity participation as well as also want to cushion the volatility. So that is actually the main delivery or the main promise of the fund. In terms of how these decisions have been taken, in our case, we actually use a very predefined P-based model for deciding on the dynamic asset allocation. And this has been very transparently been laid out to the investors in all our product documents. So that is actually the bedrock of how the dynamic the percentage asset allocation has been determined. So the aim of the model is basically to participate in the market when the valuations are actually cheaper and also reduce the equity allocation gradually when the valuation becomes very expensive. That way, when the correction happens, the cushion, the downside cushion is there for the investors.
Right. Sachin, the fund appears to have maintained its equity allocation largely around 50 to 60%. Will it ever increase its equity allocation beyond 65%?
So there had been instances when the PE multiples have reduced substantially, likewise the case is in March 20 when the COVID-led disruption happened world over and the markets took a sharper fall. That time the valuations become very, very cheap. That time the equity allocation actually went above 80%, 85% as well. So there have been instances when the model actually helped us in taking the advantage of a sharper valuation opportunities. So there had been instances. And while the range broadly has been between the number which you mentioned, but at the same time, because this is driven by the PE model, that's how it has been. But it's not confined only to that band. Whenever the model will suggest, the equity allocation will get accordingly calibrated. So we had those instances as well.
Right. Sachin, there is a belief that dynamic equity models need to be more dynamic and respond more rapidly to changing market dynamics, or else they don't really capture sharp movements in a market where cycles are getting quite short. How does IDFC Balanced Advantage Fund predetermined model works in this case?
So as I said, the predefined model, this is wherein the P multiple of the Nifty, trailing P multiple of the Nifty determines the equity percentage allocation in the fund. And we have quite a wide band, which we relook at every month end. So the wide band, as in this is a 15% band within which the per month the equity allocation can change. Therefore, this is a very healthy range in which the equity allocation can be moved around, and that helps us in terms of quickness, in terms of responsiveness to the market movements. So this has been proven time and again that we had been instances where the equity allocation has been moved in a substantial manner as well. So that is the advantage which we have.
Right. Such a derivative positions taken to an extra yield or only to hedge or rebalance the portfolio?
So derivative positions are mainly arbitrage positions. They basically maintain the equity portion of the overall fund above 65%, which gives the equity taxation to the investor. And these are not for earning yield enhancement or for the hedging position. These are all covered positions which basically are compliant with the regulation as well.
But a follow-up question to that, Sachin, so is rebalancing done only through derivatives then?
Rebalancing is done through the move, changing the equity allocation as well as derivative positions, both.
And let's talk about strategy now. In terms of the equity piece of the IDFC Balanced Advantage Fund, what is the strategy, especially for the equity piece?
Okay, that is very interesting part also. It's actively managed, first of all. And over there also, we have very clearly given out or laid out the equity investment framework itself. It emphasizes especially on the three aspects. One is the management quality. Second is the competitive advantage of the businesses and the scalability of the opportunity. So it's a very quality oriented investment framework, which has been already defined. And therefore, each of the equity allocation which is there is actually according to that framework itself.
Right. Sachin, in which scenario can a P-based allocation decision lead to underperformance?
It can lead to an underperformance when the markets will continue to be very uptrending. Because as the market will start uptrending, the P multiple of the market will start appreciating, and gradually the equity allocation can come down. In that case, the participation of the equity portion will be actually lesser than what it will basically a contra-cyclical in that nature, and that is the only period perhaps the overall equity because of the declining equity participation, the fund can underperform. However, it actually the fund or the delivery which I alluded to in the beginning is when the volatility will increase, it will actually help in terms of participating on the upside and also cushioning the impact on the downside. So that actually is the on which it will withstand.
Right. Also, we've talked about equities already. Let's talk about the debt allocation of the Balanced Advantage Fund. Tell us what the investment strategy there is.
Well, that investment strategy is very conservative. We are not taking any credit risk over there. It's basically a safer investment approach over there, and it is basically balancing the equity allocation part. So if the P model suggests that the equity allocation should move to 75%, the balance 25% will be actually allocated to debt. So accordingly, that is basically a balancing part of the overall thing.
And very lastly, Sachin, why does the fund change its band only once a month?
Because that's how it is. The P model is defined. Is every month end we look at what is the trailing P multiple of the Nifty, and accordingly the band has been changed, and this gives you it's kind of a rebalancing opportunity on each month. If we start doing it on every shorter interval or duration, it will actually induce a lot of volatility in terms of equity changes, and that can also have an impact cost. So to avoid that kind of a frequent rebalancing, we have kept as a monthly rebalancing.
Right. I think we've covered all the questions. Sachin, is there anything else you want to tell our viewers about the IDFC Balanced Advantage Fund?
So main promise of the fund, or the main differentiation of our fund, is it has a predefined PE model on the basis of which the equity allocation decisions has been taken. It's just not a model; it's also very transparently laid out. So it gives a lot of predictability as to how the valuation is a driver of equity allocation, and the whole cushioning the downside and having more smoother or less volatile journey for an investor over a longer period of time is what has been delivered through that. That is the whole USP of it.
Right. That's great to know, Sachin. Thanks a lot for your time and talking to our viewers about the IDFC Balanced Advantage Fund. It was indeed a pleasure. Thanks for joining.
Thank you. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICIdirect.